Hi everyone, welcome to Market Kickoff. My name is Anne-Marie Band and I'm super excited to be with each of you. My goal tonight is to discuss a little bit about how we can use some of the very key things associated with volume in the markets, and we'll be starting very quickly. I'm super happy. Someone says I haven't gotten to start my challenge yet. Hey, here's what we're doing. The coaches would love to have at least one meeting together before we go crazy with our accounts, and so they're giving us some time to do that, and so we feel pretty fortunate. You know, the first meeting for the Hive will be tomorrow from 4:30 to 5:30 Eastern. And so I'm looking forward to seeing each of you there. But let's hop on to the charts directly so we can sort of position some things into the market open. Let me show you what we're looking at right here. So this is on the daily side. I've got a two chart system set up here, one for the day, one for 30 minutes. You'll notice on the side I have this indicator, and it is the volume profile that is visible range. And so in this visible range, what I've done is started us at the last day of April and the first day of June. And this tells us where all the volume is sitting for the last couple of months. So here's something super interesting. The last two trading days we have much increased volume, right? It's almost Friday's trading volume is almost twice the average of normal volume, and it's selling. And so this indicates generally institutional selling because there's so much size attached to it. Okay, so what you can do, if you'll notice, if you do volume profile visible range, if you're looking at a year and you're just trying to stare down the dates, let's say all you care about is looking at what's happened in the month of July. And so we've stepped into August, and what we see in the month of July, that all the gains we made in July have been completely erased. Okay? So this is a fair zone that buyers are going to want to try to defend. So it's going to be a super important level. If the market opens and we gap below it, Monday's expected range is, what is this number? Let's go here. Coordinates 62.18. If we pop down into that region, all the buyers that are sitting there are going to try to move back into this value area. It's the bright part of the screen. Okay, now let's look over here. This is just Thursday's and Friday's movement. And you can see between the last hours of trading on Thursday, big volume moved in. Then we had traders trying to buy the dip and then failing. And then towards the end of the day, much more volume in the space. So what this tells you is that the trading range for that 70%, it's what Hogue and the team that trades, they would call this the value area. It's where 70% of the traders sat between Thursday and Friday. If I move it over just one more bit and I say, hey, let me just see Fridays, you can see all this selling volume here in this area. Now, in hindsight, this is what we're going to notice. we're going to notice that traders went to the bottom of the value area, bounced to the top of the value area, tried to get over, and then failed, and then bounced and closed inside of that value area. You can actually trade this range very nicely within trend by doing the following. If you're at value area high and your trend is downward, like we're seeing here, any bounces up into this area are going to give you likely selling pressure. Right now, the Topstep daily levels have been put in, and so we can see that this value area high almost matches my formation here. Now, it might be a little different simply because I'm choosing another number than this value area, but you're going to see this zone telling you, wait a second, if I want to trade a short, that's going to be a really nice area to set up a trade. So write that down, 6,291. My suspicion is that the traders are probably going to gap down. My book map shows a few, it shows a little bit more volume on the bottom, all the way down to around 6,175. Hi, Andrew. Thanks so much for being here. Always appreciate you. You are just an amazing resource for those of us that go live. And I just want to give you a hat tip because I really always appreciate you. All right, so that's what we're staring down. My thought is this is a great area to position for a potential short that might occur in the overnight if it gets to the top of the range. I'm going to go ahead and see. Let's see if the
order rejected.
Won't let me do it until the market starts. But that's what I'm going to be looking for. Now, there is support down here at 6,240. Here's the problem. If you put an order here and you think to yourself, hey, I'm at the bottom of the range, I should go to the top of the range, you're trading counter trend. So anytime I put up levels, and I'm going to be putting these up in the Hive specifically for the ones that I used to trade, if you try to pick a bottom, right? Let's say my data from machine learning says, and I do use machine learning and stats everywhere I position, but if it says, hey, listen, 6,240 is a support, if it comes into that area and bounces for a bit, you better get out on that first bounce because a lot of this volume is absolutely negative. And so we have to be very careful about that. I know most of us trade the NQ or some derivative of the NQ. This is Friday's formation, and let's put it up here for the NQ. Right, this is, of course, the beginning of July. Did the same thing. It's almost retraced the entire month, and the volume is pretty high. Now, it's not as exaggerated as the ES volume, but it is pretty exaggerated in the fact that it's retraced almost the entire month. Traders who are buyers are going to be thinking to themselves, holy cow, this is a do or die event for me. If price action is going to hold, it's going to hold here. So let me talk a little bit about seasonality for a quick second. Folks like John Hoagland and Eddie and Hoop and Vince and Coach Jack and JD, and so many of the traders that we see on Topstep, they understand seasonality. And seasonality is a very important part of trading markets. And right now, we are stepping into a week of seasonal weakness that's probably going to be compounded by whatever news comes across the wires. Now, it could be that we get a swift exhaustion and all that volume that we saw pile in shows an exhaustion move and we turn around and head back. The only way the chart looks good from turning around and recapturing is if we get outside of this value area, right? And so that's what we're going to be watching. Remember, keep an eye on how much your chart is showing visible, because this value area is going to mean a lot in terms of trading parameters, okay? My thought is the same. The first bounce into 23,048, that's the top of my value area. I would expect to see sellers there. I would expect to see buyers try to hold this, but I would also not be surprised to see the market gap down and then try to recover. So that's why we need to let the market settle out a little bit. When institutional selling comes into play, like we see right now, they can really shove the markets into these lower edges and take us into deeper spaces of support. Between Wednesday and Friday, on all the charts, I see expanded volatility. I really do. I want the NQ to open so I can short. Well, I'd say be careful. You might be right, but how about letting the market tell us the right direction versus we try to tell the market what the direction is? That really matters in grand fashion, actually. So we're looking at some region around 23,000 to potentially see a short. Once it recovers into that value area, easily it could be a long up into the zone, but I think all the bounces are going to be sell zones. That's my bias at this time, but the market, it might tell me something that will make me change my mind. And that's very, very important. You want the market to be able to tell you, hey, something different is going on and you need to adapt. And what I notice is a lot of traders have a super hard time changing their mind. They have a hard time changing their mind around process. They have a hard time changing their mind around what they think about bias. And listen, I am in that group of traders. I sometimes have a very hard time shifting my bias, but I'm going to let the market tell me what's going on. And right now, there is a trading range that's been clearly defined in the chart here from this edge. Interestingly, for the month of July, look where the month of July began, all the way up here. We have rotated all the way back down and on quite a bit of volume. And that volume of short action has been on the rise, right? So this is clear selling that is in process right now. The question is it enough selling that we bounce? Possibly, but for me, these bounces are going to be sell zones in grand fashion, I think. Let's go to micro Bitcoin. I think also Bitcoin is a pretty interesting space. Oh, we're about to open. Bitcoin's a pretty interesting space. And what we see is, oops, my face is blocking most of this chart. Let's try to widen that a bit. There we go. So we are outside of the value area upon the close.
The market is open.
All right, there we go. So what are the traders going to do? Now that we know this about value area, what do they want to do? They want to get the top of the value area because they know that's a safe trading range. I trade from the bottom to the top. So that's what they're trying. I've anchored a VWAP. That's this tool right here. You can find it on the projection tab, and it's right here, the anchored VWAP. And I like to put it at the prior day's highest volume space. And so what are the traders trying to do? They're trying to get inside of this value area so that they can go from the bottom to the top. That's what they're going to try to do. So if this was some sort of a capitulation on Friday, they're going to get to the top of that box, might be up over here. My thought is, since micro Bitcoin looks like this, immediately I am thinking to myself, I like the short action sitting up at the top here, and I'm going to leave that to run overnight simply because I expect the value area to move. Now, let's say you're thinking to yourself, ooh, I want to go long here. What can I do? Well, we have a gap that's 800 points wide. So if you're thinking to yourself, I think they're going to hold this area, you could also take the trade from the base of the gap or the bottom of the value area event. And that should give you an area where you would go, you know what? I'm going to go long up into this zone. I suspect that Bitcoin is not going to be able to hold these levels if it breaks. And so my thought would be, all right, here's the edge of this. Yeah, my thought would be I'm going to put my stop cells for this to be right here. If it loses this edge, I think it's in trouble. But clearly, the volume profile visible range tells you the region where the traders are going to be able to try to move. I don't know if they'll have the strength, but if they do have the strength, they're going to try it there, right? For me, if I try the dip because it's moving back into the range, it should hold this zone. My gut says that if we lose this area, we fill the gap and move down. However, that's a pretty good bounce to the upside, so we'll just see how it holds. And I think I'm going to put this right there. So 14,545. Let's go back to the ES. All right. Here's the day, right? We can see, make sure my head's not in the way. We can see the traders really trying to hang on, right? They're inside of value. So as I mentioned, what they're going to try and do is stay in this framework overnight to get from the bottom to the top. The problem is this is a lot of selling, and if buyers don't follow in enthusiastically, it's going to move to the downside. I'm going to look for the sell up at 62.93. You might say, Anne-Marie, it's at 62.62. Why don't you buy that? Because that's not my edge, right? I'm looking for a very tight stop, right? Just a few points up here, very tight stop. And I expect more traders to fade this rather than buy it. Now, I could be wrong. They could buy it right up. But what I do know is that my stop is going to be really tight. And as a matter of fact, I think I'm going to move it here so that I can let this volatility line do the work for me. But clearly, they're inside of the biggest part of the value area of the day. And a lot of times, Hogue will say, hey, if I'm in range and in value, I don't have a lot of trending motion. But for me, I love the sideways trades. And so this area is going to be very, very important to me, right? I'm going to look for the baseline event to hold. Oh, there we go. There's our Bitcoin filled. So let's see what we got going on here. Do I need to? Yeah, I think it's fine. I might need to look at a 4-hour chart for that one. All right, so again, my thought is they're going to try and hold it, but at the end of the day, it's going to be a short. We'll just see what happens when the buyers come in, right? So let's take a look at the ES here, right? And instead of the daily, let's take a look at a 4-hour. Okay, so the 4-hour formation, and let's look at Thursday and Friday, because I think those 2 days were they were a big deal, a really, really big deal. So we'll do Thursday and Friday on the 4-hour. We can see what's happening here, right? I think, if we look at a 4-hour chart, well, we're looking at the same thing, right? If I were a betting man, which I'm not, I would not be disinclined to short here. The buyers have to prove themselves in this area, and so I can't short because I'm inside of the value area, and the likely move, if I am inside the value area, that I will have a long here at the bottom, and I will be able to cover the trade at the top, or at least at the point of control of this motion. Okay, let's take a look at the NQ, see what's going on. All right, here we are again. Notice we have a small gap down, but the traders are clearly within range, within value. If you do want to short this, your stop's pretty wide, unless you're using a micro, but you could easily do it. Here's the momentum indicator. It's well underneath 50%, right? Here is, I like to draw a line at 50. Usually, I will have more buying pressure if I'm above 50 and more selling pressure below 50, but it doesn't actually, it's not always that way, but this is selling pressure. So if we fall out of the value area, could easily be, let's say we took this one, right?
Order filled.
The first target we would come to is prior support. And then we would have some measure of continuation. Okay? If you're looking for 20 ticks, 30 ticks, 40 ticks, whatever, this is, this is exactly what I expected here, to be honest, in terms of the motion. But notice they're coming in and they are trying to hold this bottom. Let's take a look at a 5-minute chart. Let's say you're saying to yourself, I really want to trade this. right? How's it going to look? Notice it moved very sharply downward, and then traders tried to pull themselves into gear. And let's compare it to the last 3 hours of the trading day, right? The last 4 hours. Let's do it from 12 to 4. We see where they are. See the traders trying to hold this value area event. Absolutely trying to hold it. So they break the edge, try to hold it, can't get it done easily. They can move to the downside. Here's something that I want you to realize. Yes, you're working with a combine. Yes, you want to make money. One of the things you have got to build in yourself is a level of confidence that says, I'm trading a strategy. This is the strategy I suspect works. And if it doesn't work, I get out, I reframe, refocus, and I do the next thing. It is extremely important that you build consistency of behavior in the trading space. So, I like to talk about sports. I got a lot of kids that play sports. I have a lot of kids that compete in tournaments across the country, across the world. And the most important thing as they build skill and proficiency is that they do the same thing over and over and over and over and over again. I'm going to flatten this because I see buyers coming into that space, right? And they're still battling at this range. So I'm going to take that off there. Why? Because I can see traders really trying to hold the bottom of this value area range. If it breaks down, great. But for me, I'm just trying to do the same thing over and over again. I'm going to trade from one region of acceptance or rejection into the next region of acceptance or rejection. So you might say, well, gosh, why'd you just take that and then take it off for, I don't know, a couple $100? Well, because that's an area of support and it's the bottom of the value area. And I know the traders are hanging out there, right? That's from Friday. If we stare down the last 2 hours of the trading day on Friday to right now, we can see that we are well under the value area from the last couple of hours of Friday. So if you're staring that down, that might tell you, you know what, I'm staying short. You wouldn't be wrong. This is a simple way of looking at the charts, seeing where the value area is sitting, realizing that if you bounce into a value area and you reject it, chances are you're going to explore the deeper edges. For me, I like more time and more information to make my decision. So I'm not going to use a value area as defined by the last 3 hours of the day, 4 hours of the day. I'm going to use the value area defined, where's my line, by the entire day, right? And there it is right there. Hang on. Got to make that a little tighter. There we go. Right? And here I am right there. That's where they're battling. Tea leaves and chicken balls. Okay. Thanks, JD. Nice to see both you and Hoop. So here we are. What I want to do is get you comfortable with information about order flow that actually sits on your Topstep platform that you might not be utilizing to its full potential, right? And this is very, very important. So let's go back to micro Bitcoin and see if this one is having itself a hissy fit. Oh, still hanging out. All right, where's the value area? Right there. Yeah, see, I don't love this trade, but let's see if it gets inside. It's clearly trying to break down past the value area, and so I expect it to move backwards, but these things are they're low risk events, and so they can sit right there. But what we did see initially is a clean rejection of this value area of Friday, right? That's pretty important. All right, let's take a look here at the bigger lines. See what we've got going on. Yeah, should have shorted this. I really felt like this is a short. I think this chart is easily going to 110,000. It might go back to 105. But let's see if they fill the gap and give it a go. Here's another topic I want to talk about. So we hear this, we hear all kinds of things that are euphemisms in the market that aren't really true, like sell in May and go away. That's really not true at all. Statistically speaking, it's completely incorrect, especially for the last 5 years. Okay, the next thing we hear sometimes is don't cost average into a losing trade. So this is an interesting concept, and people will argue with me until they're blue in the face about whether that's true or not. But here's the storyboard. Let's say you are looking at a trade and you feel the trade has a range of areas to enter in. We might compare this to one of Dolby's trade setups that talk about he essentially is using a mean reversion event where he will leg into the trade on lower levels and then reduce his cost average, also reduce his risk, and as the market makes a reflexive bounce into a mean reversion event, which is this fair value, he's able to cover for profit. And so this is the same space that I'm looking at that says, hey, I believe there's a bounce into the value area. We may have had a capitulation or volume exhaustion short on Friday. And so now what we want to see is a reversal of that move, but I definitely don't want to buy it up here. What I'd like to do is see if I can get it near the frontline support zones. And I think that's at the fill of the gap and the heavy congestion over these 30-minute charts. All right, so that's that. Yes, exactly, Greg. So it's not so much cost averaging into a losing trade. It is figuring out where you can get yourself the most reward for the least risk trading a mean reversion event. So as he layers the trades on the micros and gets the lower edge, number one, he's got a very clear defined total loss that's established. He's not going to keep adding like some of us do when we go off the rails and we go, okay, I'm just going to add one more because I just know that this trade is going to work out. We never know anything. I can sit down and do all my machine learning analytics, all my order flow analytics, all my data statistics, and the market will do something completely different. It's not about that. It's about finding what the most obvious thing is and then using it to get yourself positioned to make money. Okay? So that's sort of my diatribe on getting into a trade at a cheaper price rather than going all in and all out. For me, managing a combine, it's always more attractive to me to layer into a trade, because what I'm doing is diminishing a loss threshold, which is the most important thing that we have to think about as traders on our Topstep platform. Yeah, absolutely. I mean, totally. Let's see. Gold had an interesting popper drop. Let's talk about gold. There's some interesting things going on in gold right now. So gold is sitting in a space where I need to move this to a daily chart. I want you to see what's going on. So, sorry. So if we stare down what gold's been doing, right? Look at this range. Since April, this is the range that the chart's been in. Somewhere around 32.50 to 35.40, right? Now, when you look at this and you go, oh, you see the volume profile event right there. Now, you guys know that these are my volatility bars for where the price action might move, right? But this is very interesting to note. And when you see something that looks very pretty, right? A nice big bell curve with the edges, it's absolutely atrocious to trade. And right now, we are in the middle of the mosh pit. So here's what middle of the mosh pit means statistically. If you had no regard to risk whatsoever, right? If you could hold your trade infinitely until it gave you, I don't know, 5 points, whatever. You could go long here, you could go short here, just wait for your 5 points and it'd give it to you. But see, we cannot do that in a prop firm environment, right? We absolutely cannot. The first thing we have to do is manage our risk. So what's interesting about the volatility here for gold is that it's very wide for Monday. This happens a lot, right? But notice, see all this buying pressure on Friday? Big stack all the way up. See how uniform this is? I mean, I think it gets filled in again, but you can clearly see this ledge, nobody but buyers sitting in this zone. So if you're looking for an ideal buy, I'd like it at the bottom of the range, right? That gives me my trading range formation, and it allows me to say, okay, intraday, I can move from point A to point B, maybe to point C. Now, do I want to go long here? No, because I'm at the top of the value area. I don't want to go long there. Well, why not? It could break out. Absolutely, it could break out. What is the risk to my position that the market is defining for me, right? We're going to let the market define the risk. What is the risk here if I take a long? All right, here I am at 34.13. I could easily say, you know what? I only want to have 2 points of risk. Well, what if the market's telling you from the value area that your risk is actually 8 points, 10 points, right? This, I believe, is the value area high from Friday, right? It's Friday's value area high. See, it could be any of these, and you could be buying and stop out, buying and stop out, buying, stop out, or it could run up for you. It's much better to wait for price to tell you what it's going to do rather than just say, hey, this is going up, I'm going long. Okay, I have a question. See this candlestick right here on the 30 minutes? Somebody tell me in the chat what this long wick here and the color of this body, which white is up and blue is down, what's happening between the buyers and the sellers? Somebody give it a go. Let's do it. Anne is cute. Oh, I love that. I prefer to be called cute instead of old and grumpy. I'll take cute. Liquidity, rejection, bearish, doji. Okay, these are great. Yes. Moises, sellers have taken control because the buyers could not hold the higher prices. Now, where did we close on Friday? Right? Not settlement, closed. We closed up here at 33.95, right? And is that right? No, 34.16. And so you can see we're battling with the traders. From the last half hour of trading, settlement's all the way down here at 33.99. I think that's settlement. Yes. Got that cyan color. Settlement's all the way down here. So for me, I wouldn't be surprised to see settlement. I know this chart is trying to move up, but if I look at this whole thing and it tells me, hey, listen, since April to today, I'm sitting sideways in a huge formation. It'd be easy if I had no risk thresholds to consider anything to go long or to go short. If I go long, it ends up being something I can get to 3,500. If I go short, I can get down to here. But if I go long and it moves down, 90 points, that's not going to matter. My trade's going to be kaput, right? And so it's very important if you're trading inside of these ranges to take a look at what the whole day has been saying to you in terms of where prices are being bounded, right? Now, let's take a look at gold again. We've got some interesting currency things going on. Who knows? Every day is a new day on the merry-go-round in these parts. So let's take a look at the 1st of August, right? No, 1st of July, 2 months. Okay, so for 2 months, we've been sitting still in the range, top of the range, 34.36, right? Also happens to be the IV for Monday, so I think that's pretty interesting. And then if we do come into settlement, that could make a nice buying formation, but this volume point of control, the value area is telling me the really great buys are not until 33.60 or something like that, right? So, if I buy here, it's for a quick snap trade, right back into settlement, and then good night, Irene. I'm not waiting for it to move up to whatever. I am not the kind of trader that says, buy this and let's see how it goes. I can't, because being bound by statistical data, I'm simply going to buy at one level and sell at another. It keeps my boundaries in check. It keeps me totally focused on trading a process and keeps me engaged at understanding, hey, if it moves from here to here, that's what I'm going for. I'm not holding out for, some private island that's for sale off the coast of, I don't know where, right? Private islands are for sale all over the place. It's pretty amazing. Some of them are pretty cheap, but then got to think about getting water there and then supplies. Unless you want to live in a tent. And that's okay too. I don't want to live in a tent. But there you have it. Okay. How about a show with you and some of the guys? Oh, you're talking to John, JD. Yeah, I love Coach Jack. He's a man of few words in many spaces, but when he's ready to impart knowledge, he really does give it. Thanks, Calvin. I appreciate you. Oh, thank you so much. I loved France. It was very fair. I really loved the people. They were really nice. Now, Champs-Élysées was a little bit crazy, I'm not going to lie. There's a lot of crazy. I was a little nervous. But overall, fantastic. All right. What do we want to stare down? Oil. So, a lot of things going on in oil right now. Pretty sticky. Okay, notice, what have we done? Value area, right? Fell right out of it. What do they want to do? What do the traders want to do? They want to get back inside of value for the day, right? The prior day, they're going to want to do it. If they can't, because they want to, because that's where everybody went, you know what? This is a good price. Let's play around in here. If they come in and they go, I can't get in there, meaning nobody else is buying up in these spaces, it's going to be a nice short and it's going to fade. Okay, my thought, I think oil is a dumpster fire. Here's something super interesting. Fridays, statistically speaking, Fridays have the highest trending dates for both oil and gold. They will generally trend from those days. Notice, see all the big volume here? This was a sell volume event, that was kind of low, and then a buy volume event, higher, and another buy volume event, even higher, and then another buy volume event, even higher, and then we have our first down day on Thursday, lower volume, and then we had Friday, and that was just a liquidation break in my mind, simply because they sometimes, when trading gets very frenetic and everybody's selling, oh my gosh, we got to sell, it's sell now and ask questions later. And sometimes you get taken out, baby gets thrown out with the bathwater, as it were. I don't know who came up with that, but it's really quite horrible. You don't want to throw out a baby with the bathwater, but it really does drive the point home. So, what am I thinking? If the traders get up over 67.60 in the overnight, they're going to try and run it into Monday's vol number, which is 68.25. If they can't, from a daily perspective, they're sitting in the range of the entire month. So my thought, interestingly enough, is this line in the sand at 67.60 is going to be a fight club. If they get above it and start to frame out, you maybe look at a good 5-minute formation, they start to frame it out, it's going to be a great buy zone that will push us out to the edges of the curve. If not, and we lose that 57.50, let's say we can't get up over settlement, 67.30. We can't get up over it. We're going to come right back down and fall into the value area. And notice how we've played the value area before. Top of the value area, sells off. Middle of the value area, buy it up. Top of the value area, sells down. Middle of the value area, tries to hold, can't do it. All the way to the bottom of the value area. Back up to the top of the value area, down to the bottom of the value area. Listen, these are patterns that occur all the time. And one of my favorite things to say is the following. When somebody says, hey, I've been staring down the charts and I'm so tired from looking at so many things, and, your thought process should be gauged around, where can I exploit a pattern formation that's going to give me an edge in the market and minimize my risk? That's super important. It's super, super important. 10x all costs living on a private island. No, just getting water there. And then electricity. Yeah. It's some coinage, not gonna lie. Okay, let's get back to Bitcoin and see how this thing's going. Oh, for heaven's sakes. All right, so what we do know is the following. One, Friday's high of the last 30-minute candlestick of the day is holding as support. Traders tried to fill the gap. Hasn't happened. So they're going to try now to get inside of the value area. Remember, you have to be very precise how you open up your charts and use your blue line that says 1 day from the next, right? You just move it over and just leave 1 day. If you're the type of person that uses 1 minute charts, because I don't know why anybody would want to use a 1 minute chart, but if you want to use it because you feel you have more control over things, it's still incredibly important. Let's put in a 1 minute chart here. Right? It's still incredibly important for you to have your volume profile sitting properly in place so that you can understand where the majority of traders have positioned themselves, right? That's supremely important. I can't even tell you how important that is. It's very, very, very important. There we go. Here's our edge, right? Use your 1 minute to see what it looks like. You might even take a snapshot of it or put something else on there. I use a 30-second chart. Holy smokes. So lean hogs is not coming up for me here. I'm in the Q contract on my regular platforms. But I'm only seeing the V contract here, so not a ton of, whatever there. All right, let's see. The Sunday close is tricky. Sunday close. What do you mean by that? Which Sunday's close? Because I use a 15-second chart. Oh my goodness sakes. You're pulling my leg, right? Bitcoin weekly candlestick closes on Sunday. Sunday at midnight, Sunday at... Check the NAS, please. All right, let's do it. I aim to please, folks. Here we go. Let's check the NAS. All right. Bouncy, bouncy. Great. Right? Let's take a look. Okay, this is perfect. Oh my goodness, this is, I love it. I love when the market just does what we think it's going to do. So, as I mentioned, Friday, we have this area, right? It's the value area, 70% of all the trading. I said, hey, listen, if we stand here at the top, if we're at the bottom of the value area and the traders try to hold it, they're going to try to move to the top of the area. So now we have a question for ourselves. Here it held, I don't know, what is this blue number? Yesterday's value area low. Okay, yesterday meaning Friday. It's almost right there with ours. It's right there. So look at what's happening. They come in, they bounce into the value area low and then pop up. So now they're moving past settlement. Okay? So here's the question. What's likely to happen here? How do we estimate what that is? Big picture says we could move to the top of the value area easily. Little picture says, okay, resistance, support, resistance, resistance, push of the buyers. They can't hold on, resistance. And here we are again. So, if you're a betting man, my thought would be, all right, let's say you're looking for a scalp trade. And the scalp trade will say, all right, this is where the sellers were, right? And so you could take a short at 22,944. Or you could say, all right, I know value area low is 22,817. I'm already, I don't know, what is that, 80 points away, 70 points away. So what about maybe I take a long here now at 22,849. That gives me a little bit of a frame of reference. Notice, what am I doing? I'm trying to trade the bottom of the range and go to the top of the range. Now, you might remember that I actually had a short here. And it came into the bottom of the value area low, and I said, I'm getting out of this trade. Why? Because I know that's where most everybody got out of the trade. That's what the value area tells us. Okay? So simple, listen, here's what I know from working with traders for a really, really long time. I mean, a really long time. We tend to overcomplicate things. And when we overcomplicate them, and then somebody like me gives us some sort of simple Simon approach, we're like, it can't be that easy. It's not that easy. It totally isn't. But see, it kind of is. So your thought should be, where did all the buyers step in? Where did all the sellers step in? Don't anticipate a breakout here. What is the trend? High, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Why you want to buy that? You don't have an edge there. Listen, you could be right. You could be right. But everything in trading is a measure of probabilities. So as we come into the edge of our space, I want to share a couple of topics with you. One, trading well is an art. And it is the art of making decisions in the face of uncertainty with an emphasis on risk management. Now, if you get really good at that in trading, it's going to gravitate into your life. But here's the thing. None of us are good at that at the outset. We all overestimate our own skill. We all underestimate risk. We all overestimate the likelihood of a fat tail, right? We're always going, oh, it definitely is going to go here. Think about where the big fat chunk of trading is and work with that. It's very, very important. If you're going to build decision-making skill, which is the anchor to any measure of high levels of success and achievement, you've got to take a look at things and go, what's most likely? Doesn't mean that anything won't happen. Anything can happen, right? ACH. But here's the thing. Some things are more likely to happen than other things. So how about focusing on what those things are and taking those trades versus, hey, this could go up to XYZ. Well, it could, but probability says it's not likely to. So in the game, that's really where we have to work, right? If trading can be mastered, then everybody will be making easy money. Well, I want to push back on that a little bit. Trading can get mastered, but mastery doesn't mean 100% win rate. If you are a batter in Major League Baseball, you strike out 6.5 times out of 10 and still get to the Hall of Fame. So mastery is not 100% hit rate. Mastery is control of process and consistency of that process, and that requires mental strength that many of us have to cultivate. I certainly had to cultivate it. It took me a long time to cultivate that, right? I almost destroyed my marriage from not paying attention properly to what I'm supposed to be doing, and that is be completely accountable to myself and the people around me. Last thing, if you are trading your Topstep account, you're in great company because you have limited risk exposure as you're learning to trade the market. But if you don't have a Topstep account and you are sitting on a ton of losses and you haven't told your spouse or your significant other and you are hiding it from them, I'm going to tell you that is a one-way ticket to absolutely the worst things that could possibly happen to you. Trust me, I speak to you from experience. You have to hold yourself accountable, and you have not to be afraid to look at yourself in the mirror and go, you know what? I'd love to say that I know what I'm doing. Not really sure I do most of the time. Doesn't mean you can't get lucky, right? That's what it is. Yes. Okay. Pure approximation. Well, yeah, it was very hard, and it wasn't like I actually came clean. He went into the accounts and went, holy bleep, and then, it was a dumpster fire for months because, you ruin all that trust, and it was a hard go. I have a really great husband. He's a great support, very forgiving, but you know what? It opened my eyes to the simple fact that if I can't hold myself accountable to the people closest to me, how can I build anything that's concrete? I simply can't. I simply can't. So, as we get forward to the next step, I'm really excited to talk to our Hive members next week. We're actually going to talk about some super interesting things. There's actually something called a sudden wealth syndrome. And it happens to us as traders when we really start making money and then things go off the rails. You can see sometimes traders on our leaderboards, they make money, 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 and then all of a sudden, poof, their live account's gone. And it's actually so common that there is a psychological name for it. It's called sudden wealth syndrome. And we'll talk about that only because what it is a step that we can see in ourselves. When we start really making money, either in our combines and moving up to the XFA, we begin to lever up too quickly because we lose sight of risk. And I'm going to tell you folks, the only reason I'm sitting here today is because I didn't go all in on margin. Because I sucked so bad that if I had gone in all on margin, every penny I would have worked for, and my husband had worked for, would have been down the drain. And literally, God watching out for me. But here's the thing, we have to learn how to manage that. All right, everybody, listen, thank you so much for spending time with me tonight. It's always great. I gotta say, I really like being by myself here at nighttime because I get to ramble on, and I don't feel guilty because I know I have to give somebody else that duty. But Mo will be back with me soon. He's actually in Dubai, and Jay is working on his uncle duties. So these two guys that normally are my friends and colleagues here in the space will be back soon. But in the meantime, watch your risk, stay focused, and make sure that you've got an edge before you step into the trade. All right, everybody. Good night. Thanks so much.